What's going on, guys? So if you were wondering the state of the market, this is the meme for this video. It looks horrible. Bitcoin is now down approximately 15% in the last weeks. It's not looking good on the short term, but in this video I'm going to basically show you guys why the picture actually does look brighter in the next coming weeks and why we shouldn't be panicking too much. So in this video I'm going to be talking about the sentiment, the good and the bad news, where all of this selling pressure is coming from. So like I mentioned, actually Bitcoin right now is down 5% for the day. Altcoin season is completely dead, guys. Most coins got completely nuked. It looks like a complete bloodbath out there. The good news is that we are now really kind of like at these depressing levels where at this point, honestly, everyone got completely flushed and it most likely will end up being a good buying opportunity. So as we speak, guys, the fear and greed index is now neutral at 51. So we're finally no longer in the greed zone, which tends to be a good time to accumulate. Also looking at these crypto YouTube channel views, we can see that basically views are pretty low, guys. So this is good. It also shows you that based on sentiment, we're really not at these extreme levels where most of the time we're at tops. So we're basically at the same levels of views than when we were in the lows here of last year. The best time to accumulate is when no one is paying attention, and that's basically what's going on right now. So that's a very good sign. All right, so now let's get into why Bitcoin is down 5 to 6% on the day. So basically there's a lot of fear and FUD at the moment as we speak. So there was some bad news about the Germany government dumping about $3 billion worth of confiscated Bitcoins that they're still holding. And also we had some bad news about Mt. Gox again, guys. And no, they're not dumping 9 billion Bitcoins. So it's a little bit complicated. The video is not about this, but they're basically just going to be giving back 9 billion worth of Bitcoin, if I'm not mistaken. What's important about this though is that every time this has happened, so if we look at the three past time, we had some fear mongering about Mt. Gox exchange. This year, it always ended up being local bottoms. So hopefully this time again, this ends up also being a local bottom. Usually once the news is known, it's baked in the price, right? So regardless if the news is good or bad, the market doesn't really care about that. It cares about the uncertainty of the news. But once the news is known, it no longer matters. So usually price tends to revert to the means, which in this case would be to the upside for Bitcoin. All right, so now I just wanted to show you guys very quickly the probabilities for Bitcoin right now as we speak. This one is going to be a little bit more complex than my prior video, and I apologize. It's just because I wanted to show you guys the two ratios I use on the price action. So I basically use standard deviation on the price action, but calibrated on different time frames. And there's two I really like to use. I'm not gonna mention it out loud because I also wanna, keep my trading edge to myself, right? So I'm doing these videos to share and to help you guys and to help myself be better as a trader. So obviously my goal of making these videos is not to dox my systems and to dox what I'm using and how I'm using it, but I'm basically just gonna show you guys basically the shorter term channel of the standard deviation of the price action, right? Because at the end of the day, price is always right, and that's why I always use probabilities on the actual price action. And then as you guys can see, there's a bigger channel behind which is calibrated on a longer time frame. So obviously on the shorter time frame, we can see that now the probabilities are going sideways. And in my last video, if you guys recall about Bitcoin, I talked about basically this red range being a very important level to watch for, and that if we were not able to break it, we would, have a reversal back to the means, which is the green line right here. So right now we are at the second standard deviation on both my short and medium time frame. So right now, guys, there's about a 95% probability that this is the bottom for Bitcoin based on these two time frames, and only a 5% probability that we go lower to to the red lines right here, which would be the third standard deviation range. So right now is not the time, based on probabilities, to fumble the bag or to panic. It's a time right now to accumulate and to add to your position. You don't need to buy Bitcoin, you can just buy Coinbase or Robinhood or MicroStrategy, right? There's a lot of proxies you could also buy on the stock market if you're less comfortable owning crypto. And again, also the volatility index, guys, flashing a buy signal, which is a must combined with probability. So when you see the volatility index signaling a buy signal with the price being in the second standard deviation range, that's a very high probability setup for a nice bounce to the reversal of the means right here, which is the green line, which would be about 66,000 for Bitcoin on the short term. And then eventually, hopefully, we're able to, push higher and to break this red box right here where there's a lot of selling pressure. So this is basically a percentage that is calculated from the halving to the top of every single cycle we had. And based on that time frame, right now, we're only about 3% into that stage of Bitcoin post-halving, which shows you guys that yes, right now the price action is not looking good, and I get that, but based on where we are, we have a lot of time in front of us. So basically what I'm trying to say is the probabilities of Bitcoin being done 1 month after the halving is not very likely. Also talking about the time, right? So Bitcoin right now, we just had the halving, and I just wanted to also show you guys, like I was talking about, that basically after the halving, we have a lot of time, guys. We have months of upside based on history, and also just another chart, showing the price appreciation historically speaking for Bitcoin post halving. You guys can see that we're right here right now. So this is why I'm not too worried about the drops we're having right now. In my humble opinion, that's kind of that last shakeout where we're going sideways and most people get forced out of their position because of margin, right? It's kind of like a lot of digestions going on in the market before we actually have those big juicy gains that we should have. Sometimes it's good to take a step back and to look at the broader cycles, right? So you don't get your head stuck in the sand like an ostrich when you're just looking at price going down and you're not looking at probabilities or bigger picture where we are in the cycle. So in my humble opinion, I would be surprised that we're at the end of the Bitcoin cycle 1 month after the halving, if that makes sense. Also, bigger picture, just a different perspective. I like this chart a lot because basically it had to do with standard deviation, which you guys know is my main trading tool, is using standard deviation to see the probabilities of the price action. And this one really kind of hit home for me, where it just shows you, right, all the past cycles where we are based on time. And yeah, we're kind of like in this kind of chop suey zone of that Bitcoin tends to actually do, historically speaking. Even myself in my past video, I was a little bit too bullish too fast, and I was not actually paying a lot of attention to the actual historical price action, which had been basically pointing to sideways chop, which will then eventually end up with some nice big juicy gains if history repeats itself. So this is why I'm not too concerned right now, and I'm actually looking at adding to some of my position. So hopefully I end up being right, and yeah, this should be where we are right now in the cycle. So we just had the halving right here, and now we're basically doing some chop suey type of price action right now before we actually have kind of like this last stage of the cycle. So now I wanted to dive in one of the most important topic right now, which is understanding where is all of this selling pressure that we're seeing here coming from, right? So the number one selling pressure that is going on right now, guys, are actually the miners. So this is a cool indicator. When it turns red, it basically shows you that the miners are in a stressed environment financially. So they are basically forced to sell the Bitcoin they're mining to cover the cost of mining Bitcoin. And as you guys can see right now, well, we turned red for the past couple of weeks. So this is completely normal to see miners aggressively dumping their Bitcoin to be able to stay solvent and to continue operating their business. The second source of selling pressure that we've been seeing right now post halving has actually been OG whales that have been stacking, 10 years ago, that basically revived some of their supply. So right now we're seeing a very high amount, which is the orange color right here. And I'm going to show you guys why it's not that bad of a sign. So of course it's not something you should be happy to see, but in the same time, it doesn't necessarily mean that this is the top. The reason I'm not too worried about it is because in the same time, we're also having the creation of new whales. So the last time we saw those insane levels of new whales stacking Bitcoin was in 2020, before we had that insane parabolic rally. So this is why seeing all these OG whales from 10 years ago reviving some of the supply is not too concerning, because we're also having on the other side of the coin new whales buying and bidding up all those coins. And then obviously we had good old Grayscale that is still bleeding, and all this selling pressure basically brought the price of Bitcoin back to the short-term realized price, which is the orange line right here. And like I said at the beginning of the video, in my humble opinion, based on the probabilities, it's a good time to nibble right now to buy the dip. And again, every time we hit this line, it's also always been a good time to buy the dip, historically speaking, when we're in a bull market, right? So now the question is the bull market going to end 1 month after the halving, or is it gonna most likely continue after this congestion? Using one of my favorite bigger picture indicator to guide us to know if we're done with this cycle is the MVR Z-score, and according to this indicator, we're not near the top, which is basically telling me that right now is a good time to nibble based on internals and probabilities. Another medium-term indicator I really like to use just to see how much froth there is in the market, how much leverage there is on the long side or the short side, is this on-chain indicator right here from Crypto Quant. And as you guys can see right now, we're not at these crazy levels of euphoria or froth in the markets on the long side. So right now we're in a good place where if you bought every time this indicator was in the negative zone, it ended up being a very good buying opportunity if you just held and stayed a little bit more patient. And again, guys, if you recall in my last video, I've shown this chart a lot of times. So it's basically just the pi cycle indicator, and I believe we're still going to enter the stage 4. We're about to enter it. I thought we were going to enter it once we break above this purple line, and then we get that parabolic rally, and that tends to be closer to the actual top, and that's really when you want to be selling your Bitcoin and taking profits on most of your crypto. So if we look at an updated version right now, we are right back on this line right here. So we were not able to break above this line, but in my humble opinion, it's not necessarily a bad sign, especially that we are now below the pi moving average, which is a good time to nibble a little bit, especially if we're still in the bull market. We should be going higher eventually in the next coming months.